Hello and welcome to Markets Today. I'm Lata Venkatesh, and joining me from the Delhi News Centre is Surabhi Upadhyay. It was a quiet day on the bourses actually. Markets, the indices moved in a very narrow range, quite clearly not wanting to take a bet ahead of that big event, which will be at 11:20 p.m. our time, when we will know what the Fed has said in its statement. Whether Janet Yellen has dropped the word patient, and whether the markets are expecting the Fed to hike rates sooner rather than later. So lots to discuss on this show. Hi, Surabhi.
Hi, Lata. Yes, a couple of nervous hours ahead before we exactly know what is on Janet Yellen's mind. But before we talk about that, let's quickly bring up the top stories. Markets end a range-bound day on a weak note, with benchmark indices losing 0.5%. The Nifty slips below the 8,700 mark. Infrastructure, power and IT stocks lead the decline.
The midcap index manages a modest 17-point gain, thus outperforming the benchmark indices. Select heavy beta names like Suzlon and recent high flyers like Spark built on their gains. Good day for logistics stocks like Gati and All Cargo as they rise between 2 and 5%.
NTPC is the biggest loser on the Nifty, falling 3.5%. CNBC TV 18 learns the government has moved a cabinet note to divest 10% stake in the company. The sale could fetch the government over 12,000 crore rupees at current market prices.
Well, those are some of the headlines, and here are the experts that we have lined up on the show for you today. Vibhav Kapoor of IL&FS is joining us with his take on the markets in the medium term. We'll also get you a mood check from the sidelines of the Economic Forum for India at the LSE, the London School of Economics. On the corporate radar, Ravi Uppal, Managing Director and CEO of JSPL, will talk about the cloud hanging over their coal block auctions, and we will also get you some global voices on their expectations from the US Fed later today.
All right, before we get to all those big views, let's talk about the day's trading action. The bulls seem to be on a patient mode on the Lal Street, but will Janet Yellen spring a surprise? Ahead of the crucial decision by the US Federal Reserve, equity markets saw some wild swings in trade today. Anuj Singhal is here with the day's trading action highlights. Anuj, a very quiet session today, but I don't know what's more important tomorrow, Janet Yellen or India's all-important match?
Well, we'll wait patiently for the match quite clearly. That's tomorrow. So let's talk about today's trade. And, you know, what was interesting was that today was a bit of a reverse image of yesterday's trading session. And the market actually gravitated towards the low point in the closing hours today rather than the high point like it did yesterday. And that's because, you know, this time the stakes are just too high ahead of that Fed event, and that's why, you know, not too many would want to take long positions. But high beta mid caps did well, and that was quite interesting part of trade today. Let's talk about the stocks that actually led the market down today, despite the bank Nifty doing well. So you had stocks like HDFC, ITC, Larsen & Toubro. These were the three main culprits in terms of contribution to the index. Apart from that, some other heavyweight losers today included stocks like NTPC, BHEL and Tata Motors, all down between 2 to 3% in today's trade. IT stocks did see a lot of profit booking in today's trade. Stocks like Wipro, HCL Tech, Tech Mahindra. HCL Tech and Tech Mahindra are also going X bonus tomorrow, so the T+2 factor is already out, and that's why some of these stocks were also lower in trade. On the gaining side, BPCL was one of the top gainers because of crude falling again, so that stock was up 3%, Z was up 3%, and Reliance was up about 1%. In the mid-cap space, high beta stocks did well. Suzlon was your stock of the day actually. That stock was up 11%. Spark was up 6%. Elecon Engineering made a comeback after a long time. That stock was up 15%. And some other winners in today's trade included Just Dial, which has recouped most of the losses earlier. So that stock was down up 8%. And surprise, surprise, HMT and ITI, big gains in both these stocks, up 18% and 9% respectively. So let's see what the outcome of the Fed event is, because this could be a bit of a game changer for the near term.
All right, Anuj, thanks so much for that. Let's move on to some market opinion then. And here's a voice of caution. Vibhav Kapoor, Chief Investment Officer of IL&FS, believes the Indian markets have run ahead of fundamentals. He expects the Nifty to trade in a range of 8,000 to 9,000 in the near term.
As far as India is concerned, I think we've talked about this earlier, that valuations had become a little too rich. and the markets had run ahead of the fundamentals. So in any case, the upside for the markets over the next 3-4 months is not too great. And when you have a situation where valuations are already reasonably expensive, and then on top of that you have something like the Fed decisions, the markets can really go into a sideways to a slide down. So in short, the upside becomes very, very limited. On the downside, I think around 8,000 to 8,200, 300 is a level where again valuations will start to look attractive, and therefore you could see some buying come in at that point. So that should be the lower end of the range. Going forward, I think FY16 there could be downgrades happening. There already the Nifty EPS has been downgraded substantially, which has made the market more expensive than it would have been otherwise. So I would say 8,000 to 9,000 would be the range which the market can trade in for the next few months.
All right, so that's a little bit of caution, but today the market, of course, were in an extreme caution mode, not wanting to take any dips or any surges ahead of the Fed event. So how did the futures and options space pan out? Let's go across to Varinder Bansal.
Well, thank you so much. Nifty continues to remain in range. Volatility seen, anywhere between a band of nearly 50 points on Nifty, but mid-caps were seen in action. Individual stocks or sectors were, moving up or down. I'll start with some of the mid-caps where we saw some short covering happening in Just Dial was clearly the stock of the day. That stock was up by nearly 7%, held by short covering. And two stocks in the banking space, IDBI Bank and Yes Bank, they were active today, moving up by nearly 2 to 3% on back of short covering. Some long build-up continues in Z Entertainment. That stock has been moving steadily up nearly 4%. Long build-up seen over there. And Biocon came out of nowhere. That stock was up nearly 3%. Long build-up seen there as well. But OMCs as a sector, as a space was really active today. So HPCL and BPCL, both of them saw some long build-up happening in there. Few stocks which saw fresh shorts. Clearly, it was not a good day for NTPC, which was down nearly 3.5%, and Tech Mahindra, which goes ex-bonus tomorrow, was one stock which was down on back of fresh shorts. We also saw some unwinding pressure of long, happening in stocks like Wockhardt and Tata Motors. But clearly, it was a very range-bound day with OMCs and Just Dial, shining throughout the day.
All right, Varinder, thanks so much for that. Let's move on to some stock-specific action. Jindal Steel and Power managed a modest gain in trade today after the steep fall it saw yesterday. The company remains optimistic about winning back the two mines it had won during the coal auction. Now, these mines are currently under review by the government. Ravi Uppal, MD and CEO of the company, clarified to CNBC TV 18 that they have followed a fair bidding process and are yet to hear from the coal ministry on any rebidding.
We have not heard anything from the Ministry of Coal yet. We only know that in the recently held auction process, we were the most competitive bid for the two blocks, Gariparma 2 and 3 and the Tara block. But we have not heard anything from the government yet. I think we have gone through a bidding process which was very transparent, very fair. We have a huge respect for it, and I think in that bidding process, we were the most competitive bids. We are so convinced that the blocks that we have bid for, we are the rightful, successful bidders on that, and we should get that. And for me, it's a very, very, remote possibility that any deviation should, happen on that front. So, if anything happens, then we will have to see what the options are. But as of this point, of time, we think that, we deserve to be given these blocks, and we have gone through a process which was very transparent.
Okay, let's take a break on that note. Before that, we have to turn our attention to the global arena as well. The US Federal Reserve sets its policy meeting is later today, and that it will continue for the second day today. The highly anticipated post-meeting statement will be released at 11:30 p.m. Indian time, followed by a press conference with Fed Chair Janet Yellen. CNBC's Steve Leisman tells us what to expect.
The word is just 8 letters, but there's billions of dollars around the globe riding on it. The Federal Reserve looks set to remove the word patience from its statement, a word it has used to signal that there would be no rate hike for at least 2 meetings. But 69% of respondents to the Fed survey say the U.S. Central Bank will lose patience, the word that is, and pave the way for possible rate hikes in the months ahead. When? Survey respondents dialed ahead their expectation for the Fed's first rate hike in 9 years to August of this year from September. But they see very gentle rate hikes. The Fed funds rate is forecast to be below 2% at the end of 2016 and ratchet up to only 3% at the end of 2017, both low by historical standards. But not everyone thinks the Fed will be quite so easy.
I think the Fed has been slow to act and is a little behind the curve, and as a result, they may end up moving a little faster than what the markets have priced in.
In fact, 54% of respondents to the CNBC survey think the Fed is too easy, that is, behind the curve, the first time that number has been above 50. But complicating the Fed's decision is the likelihood of declining inflation, caused by lower oil prices and a strong dollar, which lowers import prices. That could give the Fed pause from hiking rates too soon, because inflation will remain below its 2% target.
I don't think the Fed's really so much on the verge of raising rates right now. I think they want to. I don't think the data are going to accommodate it.
But the Fed is only clearing the runway for a rate takeoff by removing patience. How quickly rates take flight and how high they soar, well, that's a debate that will begin nanoseconds after the Fed releases its statement. Back to you guys.
And you can catch all the live Fed action right here on CNBC TV 18 starting 11:30 tonight. Of course, the statement, the press conference, and then all the analysis that will follow. Investors are monitoring whether or not the word patient remains in the text of the Fed policy statement as an indication of when short-term interest rates might go up. Here are some global voices on expectations from the U.S. Federal Reserve.
I don't believe the Fed will increase interest rates this year because the economy is weakening. Now, there are two events which may lead to the Fed increasing rates. Either the economy picks up dramatically, which I do not expect. I think the economy is actually much weaker than the employment figures would suggest. And number two, because of the strong dollar, the Fed will be very reluctant to increase interest rates at the time you have essentially massive easing in Japan, in Europe, and elsewhere.
Yellen told us last month that they wanted to go back to data dependency, move away from a date, and therefore the language was going to change. So that was a pretty high hurdle. The economy certainly looks pretty weak. My guess is that it's just temporary because the labor market was one of the few indicators. If you look at charts on precipitation and temperatures, actually looked okay in February. Tax receipts still look really good. So I think this is just temporary. It's a pause, and we'll see growth strong next quarter. The Fed looks through it, and the economy will be okay.
All right, that's a myriad voices on whether Fed will lose patience or not. Time for a break now, but coming up, Sudarshan Sukhani will join in for a technical chat. We'll also get you some more trading ideas.